Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be covering our stock market weekly recap. So we're going to be quickly covering the changes in the three major indexes. We're going to also be comparing my portfolio to the indexes for the week. We're also going to be taking a look at some of the dividend payouts I received through December 11th through the 15th. Some of the swing trades that I was able to finish and then initiate this week, and what stocks I'm kind of holding going into next week, kind of swing trading, and taking a look at three stocks I had followed this week. One of them I'm holding in my portfolio. It jumped up very nicely, over 15% this week. Two stocks I was considering, or I am considering adding one to my portfolio, which I've already kind of discussed in some of my older videos. So I will be kind of covering that. I don't want to make it too long, so once we get to a pretty good point, we'll go ahead and end it. But for now, let's go ahead and get started. If you are brand new to my channel, I do make stock market investment style videos, so consider subscribing for future financial videos. So here I was writing up an article about Edison International. We have OMI, which is Owens and Minor. It's a healthcare company. And then we have STX, so that is Seagate Technology, and they're mainly known for their hard drives. I am adding a new long-term stock to my portfolio inside my Roth IRA. So one of my goals for 2017 was to receive a dividend yield average of around 4%, as well as receiving $200 in dividend payouts per month. So this will meet my goal for 2017. So I've actually already made my choice. I hope it continues to fall a little bit more. It's been on a downwards trend the last 2 weeks, and I'm just waiting for my funds to hit my Roth IRA account so I can make the buy. So here we are. We have our weekly recap and swing trades for December 11th through December 15th. So the video will be posted here once I release it. I've already released this article on my Facebook page and kind of shared it out so that others that are interested in it could take a look at it. So of course, I hope everyone else had a great week of trading. Let's go ahead and dive into it. So our weekly recap this week, the S&P 500, we're taking a look right here. So the S&P 500 had an increase of 0.83% this week. The Dow Jones had an increase of 1.33% this week, and the NASDAQ had an increase of 1.41% this week. So all three major indexes, or the indexes that most people follow, were very positive this week. My F&I portfolio had an increase of 2.71%, so very nice finish to this week. Actually had an increase on Friday of over 1.3%, which is very nice considering I have 15 to 20 stocks. You know, I have 15 solid stocks that I hold for the long term, and then a couple that I swing trade and have begun swing trading. So that my portfolio was able to go up nearly 3% in a single week is amazing. The big difference, the main reason for the S&P 500, the Dow Jones, and then my portfolio having an increase this week is just tax reform. A lot of people are moving out of, I thought the NASDAQ wouldn't have actually done this well because a lot of the tech sector, people are going more towards value investing because value stocks, now that they're going to be taxed at a much less bracket, they probably are going to be giving out some hefty dividend, like special payouts. They're also going to get, they have a lot of revenue and they have a lot of net income. A lot of this net income is going to be driving up their company. It's not going to get taxed as heavy. So I could see the Dow Jones, and then just my style of investing, I go for value stocks, dividend stocks. So kind of in the long term, I do believe that the Dow Jones and the in my portfolio will slowly beat out the S&P 500 here in 2018. And of course, my goal is to beat the S&P 500 and Dow Jones for the year. That's the whole reason of creating my own portfolio with my own hand-picked stocks. I'm trying to beat these indexes that, why else would you consider investing in single stock positions unless you could beat out the major indexes? So weekly recap for the week. So I kind of split it up now because now I have two ways of generating income. I have my non-retirement account and my retirement account. So in my non-retirement account, I was paid out by CenturyLink, $45.90, ExxonMobil, $34.65, Microsoft, $15.54, Realty Income, $14.45, Entertainment Properties, $15.98. Now that was a total of around what $126 from my non-retirement account. I rolled some of those funds into my retirement account, and then I was also paid out from CenturyLink $24.30. So for a total of this week is $150.82. So I believe earlier in the past weeks I've made around $50 so far. So I'm up over by $200, where I'd like to sit at for the month. And I'm still swing trading a couple stocks. So we have our weekly swing trades. So as you know, we finished last week with Cato, SCG, and GCI. I couldn't sell them off last week, obviously, because their ex-dividend date was either Thursday and they hadn't recovered on the capital gains, or they were on Monday. So Cato, I bought it on Wednesday, I believe, which was the 7th, and their ex-dividend date was Thursday. I couldn't quite get out of the position because I hadn't quite earned my capital gains back, so I just waited it out until the 12th, which I believe was Tuesday. Yes, it was. And then I was able to sell it off for a 4-cent profit and a dividend yield, or a dividend payout of $1.32. So you can kind of see that these aren't very much, but again, I'm just kind of testing the waters with my swing trade capability. I want to make sure that I'm able to research, hand pick specific stocks, but that I believe I can invest in either for the short term or long term, and they will get those capital gains, and I'll be able to get those dividend payouts. So here I got $1.36, $8.74, and $1.26. These are the three ones that I had last week going into this week. This week, I had a couple shares, or I had transferred money from my non-retirement account that I was paid out into my retirement account. So I had a couple extra funds on hand, so I was able to buy UGI bought 2 shares at $48.13, sold them for a 2-cent profit, and then 50-cent dividend payout of 52 cents total gain. And then I held New York Community Bank Corp for probably a month. This is actually the wrong date here. I'll fix it here after this video. They did pay out 17 cents per share. I put in 14 shares. I believe that was roughly $600. And I made out with $9.16 from the capital gains, as well as the dividend capture of $2.38 for a total of $11.54. Now, for the week, I had a total profit of $23.42. This is all inside my Roth IRA, and this is mainly to avoid paying capital gains and paying taxes on my capital gains and dividends. So I only swing dividend paying stocks that I've already prepped and investigated prior to investing in them. I buy and hold them through the ex-dividend date and then wait for the stock to recover before selling. So that is my kind of plan. I do plan on increasing my equity, so I made a lot of these sells to kind of get my money back, and I sold Community Bank Corp. This one didn't really fit my goal or my strategy. Its payout ratio is 100%. It has no years of increase in their dividend payout. They have a dividend yield over 5%, but if it's not increasing year to year and they're not continuing to pay out through recessions and they have a very high payout ratio, it's very risky for the long term. So I just decided, I'll consider it a swing stock and just kind of sold it off for a profit. Now, going into next week, I had 2 choices that I had considered buying to swing trade going into next week. One of them was STX, which was Seagate Technologies, and then the other was OMC. I decided to go with OMC because I believe it's one of it'll have the best performance and chance at recovering going into next week. So their ex-dividend date is Monday, and they'll be paying out 60 cents per share. So I bought 12 shares. So they'll roughly pay me about $7.50 plus any capital gains that I get will be gained inside my Roth IRA. So that's kind of my plan going into next week. So once I sold all these stocks off and transferred some of the funds that I had received this week, I was able to have roughly $900 available that I was able to drop into OMC. So that's kind of, if it can recover, great. I'll probably sell off those positions, use those $900 plus. I'm already capping out my Roth IRA. I have my funds in there now. So come Monday, I'm actually considering buying into one of the stocks I had taken a look at for the long term. So I hold 15 long-term stocks, and I'm going to be purchasing one additional one to kind of meet my strategy or my cap for the year of $200 in dividend payouts for 2017. So I also want to talk a little bit about three stocks I was watching this week. Three winners of the week that I was watching, two losers of the week that I was watching. So Disney they bought portions of Fox. So Disney and Fox's deal, how it affects Marvel, Hulu, Netflix, and live sports. So Disney and Fox finished their deal, and there's a lot of structure and worrying kind of going on about what exactly is going to be going on. What is Disney going to be able to control, and what are they going to be doing? Disney stock jumped huge Thursday in the news of this, so they're up 6.75% this week. So Disney is a great long-term buy and hold stock. I had considered it added to my portfolio, but its yield is pretty low. I have Costco, which is one of my dividend growth yield. It has a low yield, but I consider Costco like a growth stock, but it still has a very nice yield, and they do special payouts. So Costco kind of fits the bill on over Disney, I believe. Cardinal Health was another one I was kind of tracking. This was, I've wanted to add another healthcare stock into my portfolio. Something in biopharmaceuticals or some sort of a sector. And I had considered Cardinal Health for the longest time. The 5-day change on this is very nice. You can see after hours on Thursday, they had a very nice increase, continued into Friday. So they were only, they had a very nice increase on Monday. Looks like pre-market hours, they had a very nice increase of around 2%. They kind of kept it going for the remainder of the day. Into Tuesday, Wednesday, not too much change here. And then Thursday, they kind of settled a little bit and then picked it right back up on Friday. So they had a very nice increase of 7.3% for the year, or for the week. Now, their price to book, I think, was here. Yeah, it's on their 3. Price to sales, I think price to sales. So very nice stock. Just kind of on the outside. Now, one of them, as you know, CenturyLink is kind of like my kind of buy and hold. This one, it's had some people talking some shady stuff about it, just kind of across everywhere. Will it recover? It's going to go bankrupt. I've been told, but I don't believe so. It's going to be recovering here shortly. It's already gone up 15.81% this week after it's been failing. It was down in my portfolio roughly 20%. So it's made a recovery of around 15.81%. I'm only down in the position roughly 6% now. And in my Roth IRA position, I'm nearly at 0. But inside my non-retirement account, I am sitting a little bit still in the negative. But I believe kind of going forward, CenturyLink is going to be jumping back up. Give it another 6 months to a year. You'll see that I believe CenturyLink will be back in the $20, $27 range, especially with the FCC ruling and some of the changes that are coming out with what CenturyLink's able to do. So I believe, this is one that I've put in a lot of, it's really not a lot of equity. I have 130 shares of CenturyLink. It's on my website, so I don't mind sharing a lot of the information, but I think they're going to be going in a nice direction. So we have Edison International and Pier 1 Imports. Now, Pier 1 Imports, I wanted to add to my portfolio a while ago when I really wasn't great at looking at a lot of the numbers. Looking at the numbers now, it's not something I would add to my portfolio, and you can kind of see it's down huge for the year. Over the year, it's down 51.87% this year. I haven't deep dived into this one to see why or what's causing them to go down so hard. This is just one. I remember looking at it in the past and kind of looking at it and thinking in a sense like, man, should I add that one to my portfolio? But as it turns out, they kind of flunked down a little bit. So they had very nice increase on Wednesday of 6.96%. But Thursday and Friday, they just fell hard and just kind of stayed down there. So this could be a good one to buy and hold. They might have another increase of nearly 7%. Or, this could be the bottoming out point. Will they go any lower than $4? I'll let you guys decide that. Now, EIX. Now, this is Edison International. This is one that I've actually considered added to my portfolio. So this is the one I've kind of been talking about on my Thursday and Friday release. This one was affected pretty negatively by the California fires. They've actually kind of settled on a settlement with California in deciding to pay. So them and a telecom company in California settled on what they are going to be paying out. So this is one I've looked into quite a bit. The CEO has been in the position since 2016, but prior to that, he has been in different executive positions kind of throughout the company and sub companies. So he ran as a president for one of the subsidiaries, and he's done a lot. He's been with the company for a very long time. He knows the ins and out of it, and now he's in the CEO position, so he's going to be changing it up a little bit. He's only been in the position for a year, and I believe kind of going forward, they're down 3.17% this year, but that's mainly due to the last month or so. You can see that in the last month, they're down 14.82%, and this was mainly due to California's utility lost more than 3.3 billion in market value from wildfires. So the wildfires drove this company down nearly 15% in just the last month. Now, was it worth it? Will it recover? Will the wildfires stop? Yes, of course. Give it some time. They will stop, but the company will recover, I believe. It's sitting at a really price to book ratio is a 1.88. Its earnings growth, the dividend increase, they hiked up their dividend payout by 12%. They've been paying dividends for over 10 years, so they're very resistant to recession. They don't cut back on their dividends. If they do go through a recession, normally they kind of hold out at the position that they're at until they can bump it up, and it usually like a year or two. So I'm actually buying in at a position of around a 3% yield at a $69 point, whereas in the past they were roughly trading at $80, $82. They were on an upwards trend here for the last year. So year to date, we can see that they've had very nice growth for the year. Just this little wildfire incident that took place knocked them down a humongous amount. So I'm looking to buy this as a long-term buy and hold because they have a strong company, utility company. They have lots of other sectors beneath them. Very good looking company. I don't want to dive too much into everything because there's just a lot. When you research something, you get all the notes in your head, and then you make your decision, and then a lot of those notes that you had, if you don't write them down, they're just kind of butterflies in your head. That's kind of how it feels right now. So that is it for this week. Hopefully that was fun and entertaining. If you have enjoyed the video up until this point, remember to hit the like button at the bottom. If you're brand new to my channel, go ahead and hit the subscribe button in the bottom right hand corner. If you liked the video, if you want to leave a comment, if you have any questions, go ahead and leave them in the comments below. I will always respond to your guys' comments and questions. Thank you guys for tuning in, and I will see you next time. Have a great day. Bye-bye.